Tesla closed the week at $200. And as of right now, it's looking like we should still be seeing the breakout next week back up to $220 before a potential rejection. I did go ahead today and I closed out some cash secured puts that I had on Tesla that were expiring today. At the time we were trading right around 200, I decided that I was just going to take this small profit off the table and open up more cash secured puts for next Friday. Cash secured puts that I ended up getting was August 16th, $190. This is only going to give me a 1.2% return on my capital if I were to make the max of that premium. But the reason that I'm doing this is because I am bullish on Tesla. And if Tesla did pull back down to $190, I have no problem acquiring shares right there at my optimal trade entry. The other thing that I also did today was I averaged down on my December $260 calls. My plan for those is that if Tesla continues to move its way back up into that 220 range, which I think will happen, I'm going to start to take some of that off the table between 220 to 228, and then I will look to roll that out. So it just means close out the contracts, whether it's win or lose, and open up more calls instead for probably February. The other thing that I'm going to do is open a hedge against those calls with some puts, because I do believe that we're going to see Tesla, as we said, push back into this market bias range. I think from there's a very good chance that we will reject short term, maybe sell back off into $192 before eventually making the bigger run to $300 by the end of the year. We're still within this institutional buying range and this golden pocket. This level is where we will normally bounce within a market cycle. The thing that I don't like is the market bias indicator, which is this red and green tape. We're underneath of it, which means that short term, we are in a bearish trend. And in most cases, we don't just bounce off of this golden zone level and rocket right back up to all-time highs or most recent highs. Instead, price will bounce into the market bias, reject off the market bias, sell back off into the golden zone, bounce off the golden zone, start to push back up, break over the market bias, and then reverse the trend. If we move over to the hourly chart, you'll notice that that's basically what's about to happen here. Price is selling off into the golden zone, and now we're using this market bias indicator as our short-term resistance. If you guys want to learn how to use this indicator, where to find it, the exact settings, go ahead and take our free course. The link will be in the description. Once we get confirmation of a hold over this level, normally price will push over, pull back in, and then we will start the reversal. So I believe that that same type of price action is going to end up happening on the daily chart. We're most likely going to move back up, sell off, move back up, sell off, and then make the reversal. On the weekly chart, that would also line up as well, because even if we see Tesla push its way up to 210, I don't think that the weekly market bias is going to close with higher highs. This week, up until this point when I averaged down on my calls, I was bullish short term because I knew that we were going to bounce around 190 to 200, but that's why I've been focusing, instead of being aggressive with buying calls and buying shares, selling cash secured puts. We have to see what ends up happening next week, but I do think that we should make that move to 220 by the end of next week. Worst comes to worst, in the next 2 weeks. Let me know what you guys think down in the comments section. As always, thank you guys for all the support. I'll see you next time.